Good morning. Good morning, everybody. Right. How is everybody doing this morning? Have you all had a good weekend? Did you all have a good weekend? This chair's quite noisy. Right, so I haven't looked at charts since I closed them on Friday. So you'll see that still got all the zones mapped out. So for the sake of the new week, let's just clear everything. Okay, and then we will get to the fresh analysis. Slow start to the week. Obviously, we've had Frankfurt, we didn't experience much there, and now into London, you'll see that we also, relatively slow movement here. So we'll see what else we can get through London session. But at this point, yeah, slow start. Hence, I've only just jumped on and sat down. But yeah, otherwise, good morning to you all. I hope you're all well, all healthy, and all had a good weekend. Hope you're all ready for the new month. I'll let some more individuals join in before I start running through the analysis. Just so that nobody misses anything. And we'll take it from there. Good morning. The mic set up. Yeah, so I need to actually get an arm for the mic so it doesn't sit on the desk. I must actually maybe pop down to the shops and get that sorted today. And try and eliminate everything on the desk so that the only thing that sits on the desk is the board. So I need to kind of get something to pop under the desk as well, that I can kind of store the Mac Mini on the MacBook. And then obviously the mic sits in the arm, or on the arm, and then the desk is free. Hey, what's up, James? You well? You good this morning? Okay, so while we sit here, while we wait and give others an opportunity to join in, won't you smash that like button? Yeah, I guess I'm not asking too much, but hit the like button. I'm sure it helps kind of push this out. So yeah, give it a like. It's not gonna do you any harm. There you go. There you go. I don't know, what do the likes do? Maybe I should do some research, but do the likes have a kind of impact? Okay, I think let's get to it then. All right, so for those that have just joined in, welcome, good morning to you all. I hope you're all well. Hope you all had a good weekend, and into April we go. Looking forward to this. Looks like we will have some nice movement come through the month. Yeah, looks like profitable one ahead. So let's get straight into it. Just before we look at the technical side of things, we've got to obviously take note, and we've got to look at the fundamental side of things. And today we don't have much on the cards. So from a fundamental standpoint, we are good to go. We're in the clear, and there is nothing to kind of take note of and be concerned about around, or within session that will affect execution or time of execution for that matter. So moving on to the technical side, if we just have a look at pound yen, so we'll move straight over to the daily time frame, of which you'll see we're currently sitting in a nice consolidation range. Now, looking at the daily, we do not have the best structure here at this point. You'll see that the main thing that we need to obviously take note of is the fact that price has managed to find a strong support region at around 159.500. All right, dipping into about 159. So this wick region, this entire wick region here, holds as our critical support zone based on the daily time frame, being our demand. Okay, demand, support, whatever you want to look at it as. Then looking at the momentum higher time frame, although we've seen days of movement here, from a higher time frame perspective, we are still bullish. We still have that bullish momentum. And given the fact that price failed to get below 159, and we saw price get back above this next critical zone over here, all right, you'll see that that still holds. We are still bullish, and we're looking for that bullish continuation. Now, looking at the previous daily close, all right, which was Friday's close last week, you'll see that we closed bullish. Now, today's daily candle has opened. We've managed to create the bottom wick, so we have opened favorably to potentially get that push. Now, looking at the higher time frame, longer term, we could potentially see equal highs, right? This wick to be filled. But that's obviously not what we're interested in at this point, because that's not part of the plan. So moving down to the 4 hour, now that we've established our bias and we know what we're looking at and where price is currently trading, we can clean this up a bit. So now we'll take note of recent structure and where price is currently trading. You'll see that we've obviously got a nice consolidation range. Okay, we've got a nice consolidation range over there on the 4 hour, so critical consolidation. We've got a critical zone just above that. Okay, so that would obviously hold as our critical resistance, which you'll see to the left hand side. That is where price has rejected, and price has turned multiple times, so that obviously holds as our resistance or our supply. Okay, so reason being is because we've rejected that price point, and to the left you'll see how we've rejected it once again. So in order for us to start looking at that bullish continuation, we need to see supply being taken out. We need to see the resistance zone being taken out, right? And that obviously will come in with a break of the wick high to the immediate left within that zone, to then potentially retest to continue pushing in line with the higher time frame. So that's what we're looking at on the long or higher time frame. Now we'll obviously start dissecting it further to see what we have and where we can start looking at scaling in. Now, with that being said, there's obviously, at this point, we're neutral, because anything can happen. Price does not have to break or take that supply out and continue bullish. We can reject that level for once more to then push through this consolidation range down into that region there, and that is where we can start looking at potential shorts, right? Where we will then look at those sells straight back into the low of that demand zone, or the low of that support. So that's obviously the second play we're looking at. So at this point, we're currently neutral because anything can happen here. So we need to just wait for price and react accordingly. So if we start breaking this down now and we start refining our zones, just before we do that, we will identify our target zone over here, that being the next critical resistance or the next supply. So we're looking at a push through this range here. Okay, based on the 4 hour, you can see it is clearly mapped out by that period of order accumulation or consolidation. So now we can start refining, and moving to the hourly, you'll see how that holds perfectly. All right, there you'll see the wick high I spoke about to the left hand side. The wick high to the left, which needs to be taken out. So if we look at lower time frame structure, right, in line with what I just said, based on the current daily candle and how that daily candle is forming, we've got favorable structure here. So this is the low of that consolidation range that I mapped out in the 4 hour, where price is currently sitting, hence our neutral stance. So now what we need to see is, you can see we've got a high just below or within that critical zone. So what I'd like to see here, in order for me to entertain potential buys, is I need to see price create further structure, further lower time frame structure within this critical zone. So what I mean by that is, we need to see price push above the immediate high to the left that was created, to then push into the high of the supply zone. Okay, to then come down on the lower time frames, lower time frame being the 1 minute, the 5 minute, the 15 minute. It doesn't have to necessarily be on the hour or the 4 hour, to create structure, create that fresh high, to then hold lower time frame structure building up, to tell us that buyers are still in control, to then get above that, to retest and push. All right, so that is, just give me 2 seconds. I'm getting phone calls. All right, so that's obviously what we're looking at here on the hour. So that's what we need to see. All right. Lost my train of thought there, but I think that's pretty straightforward. And if we're going to have a look at potential sells, I mean, we're looking for the same thing down here with the break of the wick low, right, to fall down into that region. So is that clear to everybody based on what we're looking at on pound yen? Does that make sense? I don't think that's too complex. But right now, we're not looking to trade within this consolidation range, because, although we're holding structure, it's still a consolidation range. You can see that price is struggling. We've had a very slow start to the morning. So the next leg should be created on the break of that zone. We've been holding below this zone, the entire week last week. So that's very important. Any questions around that, or can I move over to GU? Any questions, or can I move over to GU? Same setup. Yep, that's great. That's great. Yeah, Owen, what's up? W formation. Not too sure what you're on about, but okay. Should we be worried about the little structure created to the immediate left? This here, well, we need price to get above that structure to push into that high there to create structure to then break and push. So that's what we're waiting for. Does the bearish hourly close to the left, just above the zone, not cause any concern. You talking about this here, Owen? Yeah, so you'll see how that ties in to the psych level of zero point 0.5, right? So it is something I'm keeping my eyes on, and it is something that we need to take into consideration. But we'll only know if price will, continue once we've created structure. So that's the important thing of letting price create fresh structure, new structure within this zone, which will then probably see price tap zero point 0.5, maybe reject, and then give us, while creating structure within that zone, to then break thereafter, if you follow what I'm saying. So we'll only, although that is something that we need to be mindful of, and that is structure and significant structure that we need to take into consideration, once price has formed fresh structure over here within the zone, we'll then monitor to see how we are, if we are rejecting, how price is forming and reacting within this price zone, to then get the break of that psych level to continue pushing. So we'll only, time will tell with that. But I do see exactly what you're seeing. So yes, it is something to look at. Okay, perfect. There. So you follow on with that. That's great. Let's move over to GU quickly. There's not much to really cover here on GU, because if we talk about trade selection, we're obviously going to be looking at GJ, because GJ looks a whole lot better than what this does. There's no reason to even go over the daily here on pound dollar. As you can see, I mean, rejection, we've got 1, 2, 3, 4 rejection wicks to the upside here on pound dollar. Ultimately, longer term, higher time frame, we are bearish, and here we are just sitting within a consolidation range. Yes, it's a very big consolidation range, but you can all see that structure within this consolidation range, it's not clear. It doesn't make sense. Thing is, if it does make sense, I would be a bit worried or concerned, because at this point, this order accumulation, this consolidation shows us that volume is low, shows us that we don't have momentum, there's no flow. So for me personally, if I'm going to look at that as opposed to what we've got here on GJ makes complete sense. And looking at GJ, we've spotted and we've identified a setup within a couple minutes. Whereas now looking at GU, we've identified a massive consolidation range here on the 4 hour, and trying to break that consolidation range down, trying to dissect that, it's going to cause a bit of a headache. So the thing is, my question to you is, looking at the thing of trade selection, which is very, very important. It's an integral part of a trading plan, right? If you look at that, and you look at the two pairs for session, what makes the most sense to you? And if there is something that you're looking at here on GU, well then that's obviously in line with your plan. But for me personally, and for the community members, and my focused students, they'll all tell you that GU needs to be left alone. So with that, I don't think I'm going to spend much more time here, because just one last point I want to bring up here on the 4 hour with GU is the fact that the current 4 hour candle, it does not have a bottom wick, right? So that is unfavorable higher time frame candle formation. So with that, that's the second red flag. So the first red flag was the consolidation, which tells us that we're still sitting in order accumulation phase. Number two, that also tells us that that we've got low volume or lack of volume, no momentum. And then the third thing is the fact that this 4 hours forming unfavorably. So with all of those three flags, we step away. I mean, you should step away after the first red flag. We've now got 3. So there you go. Wade says he's swiping left on GU. I think I'm going to do the same. But GJ is clear as day. It's just now a matter of waiting for that break. Because you can see, you know, we're sitting in a consolidation range of what's this, you know, 100 pips, but within the consolidation range, what are you actually going to trade here, right? Because we've identified that minor within the middle of the consolidation. So if we quickly move over the 4 hour, that is what we've identified as our consolidation range. Okay, simple. So now if we dissect that and we break it down further, move down to the hourly, you'll see that we've got that critical zone within the consolidation range. Now, yes, breaking below that, you might be of the opinion, well, hold on, we could potentially carry short into the wick low. But what you need to also understand is the fact that this wick here, a wick, so listen carefully, a wick tells us that we've got rejection, that we've got that shift. And if you go down to the lower time frames, because that wick occurred on the hour, you'll see that resulted in a lower time frame shift, okay? Which means that entire wick holds as our support. So the point I'm getting at over here is, if we do carry short below that level, you're looking at a range of, call it 25 pips. Yes, 25 pip range is more than enough to trade. But now what you need to take into consideration is the fact that although we've got, you know, a tradable range there, we don't have momentum, and momentum is the base of the approach, okay? We don't have momentum here. So there's the first red flag. Secondly, the reason why this wick region is so important to be mindful of, to take into consideration, is because if we do carry short, you cannot look at a set target of the wick low. You've got to look at this entire wick zone as the target. So we are looking at a potential range of, call it 25 pips, not a potential range of 50 pips, because that is a significantly big wick on the hour, which is about 25 pips. So you can't go and eliminate that wick and say, hold on, we're targeting the wick low, because at the end of the day, a wick indicates, and a wick creates a support zone, a resistance zone, a demand zone, and a supply zone. So with that is where you're looking at getting out of your position. Yes, you could potentially leave your position running as you monitor lower time frame structure and price action within this region. And if the lower time frame doesn't show you any signs of downside rejection, you could get the full carry through into the wick low. But ultimately, before price is pushed into that region, we don't know what is going to happen. And that is why we need to target the body of that candle, right? Very, very important. Very important. Does that make sense? So with that being said, you can see that entire consolidation range with the lack of momentum and the tradable range of 25 pips, it's not appealing to me. Hence, I'm not going to look for potential shorts on the break of that. Does that make sense? Does that explanation make sense in terms of what we're looking at a wick region as, and how we need to look at potential targets, or where we need to take or start considering getting out of a position, depending on what the lower time frame is doing, right? Price movement, structure on the lower time frame. Because if the structure on the lower time frame suggests that, you know, we'll still carry through, then leave your position running, and that just comes down to trade management, right? So yeah, I hope that was a clear explanation on that. So that obviously, you know, affects tradable ranges. Wicks affect your tradable range, because you can see if you didn't take the body of that candle into consideration, right? You would have been looking at a 50 pip tradable range, but taking the wick into consideration, that's now been broken down to 25 pips and 25 pips. So do you see how your tradable range is affected? I think that's very important to take away. So say we sell below the Asian low, our first target would be 0.5. The Asian low. don't think I'm following. Not too sure if I'm following. Oh, you say, okay, there. The break of that, yeah. Sorry, that was a bit of a brain stall. The pip range on GJ seems to have increased lately. Anyone noticed that? Why is that? I think if anybody could give you an answer to that question, I think number one, they would be lying, or number two, they obviously move the markets. But yeah, there's no explanation for that apart from just possibly the volatility within the market as a result of what we're seeing fundamentally. But there's no reason as to, there's no exact reason. You can't go and say, okay, well, during April or during March and April, GJ has bigger pip ranges as opposed to like October and November. It's just, it is what it is. It's structure, it's price action. Price is obviously fundamentally driven, which brings about technicals, which is what we trade based off of. And they go hand in hand, but we can't sit here and give reason as to why we're now seeing bigger pip ranges and the rest. It's just a result of price movement and what we see in the market. So we just need to obviously adapt and react accordingly. So yeah, I mean, I wouldn't really look into that like that. That's insignificant. It has no place in your trading plan, so why do you even need to worry about it? It's the little things like that that cause a lot of doubt and creep in, start affecting your plan and your approach and your decisions. There's no relevance, and if there is no relevance within this, then you don't even need to worry about it. Like, just eliminate it. If that makes any sense. Not that I'm having a go at you, I'm just kind of pointing that out because I think a lot of people struggle with that, and a lot of people let things like that kind of affect them. If you play background music on a YouTube live, does YouTube take the video down? Does it like stop your video for copyright and that? Does anybody know? Because then I think I need to start doing that so it's not so silent. Depends on the music. You got an EJ channel. You want to look at EJ? Do you want to look at EJ? I mean, that's quite interesting. That's quite interesting. So we've obviously got our resistance that sits there, and our support which sits there. We are obviously got that intra-week bearish momentum. If we move over the 4 hours, something very similar there with the consolidation that we're seeing. So we got consolidation that sits there. So essentially we've got a tradable range down into that level over there. like that. So ultimately, you know, we could definitely see some potential shorts to fill this. The thing is, you know, looking at that on the 4 hour, yeah, it looks good, it makes sense, it's pretty clear, but something that we need to dissect and we need to look at on the hour is this here, because you can see, given where that liquidity pool was into, we can see that we've got a level that we need to look at there, which will be broken down and will become clearer on the hour, right? So if you're looking at it like that, yeah, that's great. But because we've got price action to the left of that, we've got more information that we need to look at and we need to take into consideration. And that information is that wick there, which you'll then see ties into the wick over there. Which obviously, what did I say a wick was? A wick is a resistance, a support, a supply, a demand. So you'll see on the hour that will become a significant level that you'll see a whole lot clearer than that of the 4 hour. And there it is, right? There it is. So ultimately, that's essentially what you're looking at, which extends down to that, right? So below this consolidation range, you've got a 25 pip range, right? You've got a 25 pip range, and that is tradable. That is tradable. We'll have to see, especially after this period of consolidation, because this period of consolidation will obviously then bring about bring about a nice push, right? To get the continuation. So ultimately, Wade, just to run through that, that's obviously what we need to be looking at, right? But then again, although we've taken that into consideration, there's something else to also bring into it is the psychological level of 135, because although looking at this, you know, this wick ultimately becomes, this wick region here ultimately becomes our next level, right? Remember, we've also got a wick here, so that wick then tapped into 135. So that region here, if we were to just refine based on the 30-minute and the 15-minute, we would be looking at this entire zone. So like I said on GJ, you know, we're looking at about 17, call it 20 pips into that zone. So we need to also look at that point. But still, you know, all in all, 20 pips, we've got a tradable range. So that is something that we could entertain. We will have a look at that. We can keep eyes on that. Okay, so all in all, to just quickly run through everything one last time, we've got pound yen. Pound yen, you can see we've got that period of consolidation, so we're needing a break above that zone there to get involved. Potential buyers looking at that higher time frame continuation, or we're looking at potential shorts below that wick low. But we'll obviously reassess once price trades into either of those areas. But at this point, we are neutral. Obviously looking at this quickly, you know, given the current lower time frame structure, I'm leaning more towards buys, so that bullish bias. But obviously that will only hold once we get a break above our zone, our key area. Then looking at GU, we are sitting in a massive consolidation range. We've been through this. It's not clear. I'm leaving that alone. It looks like a complete mess. And then Euro Yen also consolidation, period of consolidation. So we're looking at a potential break of that low there to then look at a push through into 134.5. So that's obviously what we'll be monitoring this morning. I think I'm going to wrap this up now. I've got obviously 1 or 2 calls that have come through. It looks like I need to go and deal with some things. So I'll do that now. For those that are in the community, I will keep you all updated in the Discord channel as per usual. Let's have a good day today. For those that aren't in the community, I hope this was somewhat helpful, beneficial, and I hope you have an incredible day. I hope you have a profitable week, and yeah, otherwise I think that's it from my side. Guys, stay safe and just be patient, okay? Just be patient. But for now, have a good one, and for all the community members, I will touch base in a bit in Discord. Right, cheers for now, guys.